Imagine dropping just $1,000 into 3 overlooked penny stock ideas last summer and turning that small stake into tens of thousands of dollars within a year. $1,000 invested in quantum computing ticker QUBT on July 25, 2024 would have grabbed you 1,492 shares, and today that stake would be worth around $29,000. The same $1,000 placed into DeFi development ticker DFDV would have secured about 1,538 shares, and as of now, it's worth a jaw-dropping $36,600. And if you backed Nudex Health ticker NUDX last year, you'd own about 210 shares today, now valued at approximately $23,800. These gains are huge, but they're just the beginning. The bottom line? Penny stocks can generate overflow-sized returns, but finding the right ones that has the potential of making millionaires in 2026? That's the real challenge. So, if you have $1,000 to invest and you're chasing your own breakthrough winner, stick around because in this video I'll reveal 5 penny stocks with the potential to mint millionaires by 2026. We'll break down the catalyst, dig deep into the numbers and the risks, so you can decide whether to buy or if these penny stocks should be added to your watch list. To celebrate reaching 5,000 subscribers, I've created a free guide on spotting breakout stocks. You can grab your copy from the description below. If you enjoy this kind of content, don't forget to like, share, and subscribe. It helps us reach more investors like you. Quick reminder, this video is not financial advice. Investing in stocks is risky. Always do your research before making any decision. All right, the first penny stock that will make millionaires in 2026, Richtech Robotics, ticker symbol RR. Richtech Robotics is a small-cap company in one of the fastest-growing industries today, AI-powered service robots. Their technology is aimed squarely at sectors where automation is in high demand: restaurants, hotels, and retail. Imagine robots that deliver food to your table, clean floors, or act as concierge assistants in busy hotels. That's the niche Richtech is building into. And while the company currently trades at around $3 a share, it's starting to attract serious attention. Why? Because the service robotics market is expected to more than double by 2026, growing at over 20% annually, fueled by labor shortages, rising wages, and a global push to integrate AI into day-to-day business operations. For Richtech, the next 12 to 24 months could mark the leap from being an interesting demo company to achieving real commercial scale. If pilot programs in U.S. and Asian hotels and restaurants turn into long-term contracts, 2026 could be the year this stock breaks out in a big way. The most intriguing part? BlackRock recently boosted its stake by over 380%, buying an additional 3.6 million shares and bringing its total investment to nearly $9 million. For the world's largest asset manager to pour millions into a micro-cap penny stock is rare, and it signals that something is happening here. They're not alone either. State Street and Morgan Stanley have also quietly increased their positions, suggesting that institutional money sees potential that the broader market hasn't priced in yet. Meanwhile, Wall Street analysts who follow the company have set price targets in the $5 to $7 range, a 110% upside from where it trades today. And that's the conservative view. If adoption ramps up, the potential ceiling could be much higher. Of course, this isn't without risk. Richtech is still a tiny, speculative company competing against giants like SoftBank Robotics and other well-funded startups. Execution is critical. A few failed contracts or stalled adoption cycles could send the stock tumbling. Profitability is still years away, and like many penny stocks, dilution risk is always on the table. And let's be clear, just because BlackRock and others are buying doesn't mean success is guaranteed. But when you combine institutional interest, clear analyst targets, the growth of service robotics as an industry, and Richtech's expanding pilots, it's hard to ignore this story. Bottom line, Richtech Robotics may not be a buy-it-all-today kind of stock, but it's absolutely one to keep on your watch list. Between institutional buying, analyst backing, and a rapidly expanding market opportunity, this penny stock has the ingredients to surprise by 2026. Next, solid power ticker symbol SLDP is a high-upside speculative play in the emerging solid-state battery sector, an industry expected to redefine energy storage. The company specializes in sulfide-based solid electrolytes and is backed by automakers like Ford and BMW, giving it early credibility in the EV supply chain. They recently reported Q2 2025 revenue of $7.5 million, beating forecasts by over 50%, and maintain a strong liquidity position of nearly $280 million. Their pilot SP2 line, set to complete by mid-2026, has the potential to double electrolyte production capacity, moving them closer to commercialization. Analysts including Needham have raised SLDP's price target to $6, betting that even a modest 4.5% EV market penetration by 2032 would create serious upside, and with a current ratio of nearly 24x, Solid Power seems well capitalized to scale. By 2026, the global solid-state battery market is projected to take off. Early commercial deployments are expected around 2026-27, with broader market size hitting potentially $9 billion by 2035. Solid Power's partnerships, particularly with SK On and its expanding pilot lines, position it squarely in line with this breakout timeline. However, risks are real. Solid Power is still loss-making, with over $40 million in net losses year-to-date, and profitability isn't expected until late decade at best. The SP2 line must scale flawlessly, and delays could derail expectations. They face fierce competition from other battery innovators and automaker-backed ventures. External risks like EV demand fluctuations, raw material costs, and regulatory shifts could weigh heavily. That said, SLDP should be on your watch list. It offers high-conviction upside in a transformative industry, backed by automaker validation, strong liquidity, and a clear timeline to commercialization. For speculative investors betting on next-gen energy tech by 2026, Solid Power is a name worth following closely. The next penny stock, ZenaTech, ticker symbol ZENA, is a low-float technology company developing AI-powered autonomous drones designed for indoor inventory management and specialized missions in sectors like defense, logistics, and agriculture. These drones aren't just toys. They're built for mission-critical tasks such as warehouse automation, facility security, and defense applications where precision and reliability matter. With only about 12 million shares outstanding, ZenaTech has all the hallmarks of a volatile but potentially explosive penny stock. In fact, the stock has already shown its ability to rip higher, surging more than 110% in July 2025, after being named as one of the beneficiaries of a massive $33 billion U.S. defense spending package focused on drones and autonomous systems. That kind of government tailwind is rare for a company this small, and it instantly put ZENA on the radar of speculative investors. Looking ahead to 2026, the timing lines up perfectly for what could be a breakout year. Global demand for drones is expected to grow at over 20% CAGR, and adoption is spreading beyond the military into commercial and industrial settings. With labor shortages, rising operational costs, and the push for AI-driven automation, businesses are increasingly turning to drone-as-a-service (DaaS) solutions. If ZenaTech can secure even a small slice of this expanding market, its revenue potential could multiply quickly. Combine that with continued congressional support for defense automation and the rise of private sector contracts, and 2026 could be the year ZENA shifts from a speculative play to a genuine growth story. That said, investors need to tread carefully. This is still a micro-cap company with limited resources competing against much larger drone manufacturers. It is heavily dependent on government spending, which can shift quickly with policy changes. Delays in scaling its technology, regulatory hurdles around drone use, or funding shortfalls could derail momentum. And with such a small float, ZENA is vulnerable to sharp swings in both directions. Gains can be explosive, but pullbacks can be brutal. Even with those risks, ZenaTech's positioning in AI-powered drones, combined with its link to federal defense spending, gives it a unique edge among penny stocks. It may not be ready for prime time just yet, but the combination of defense tailwinds, low float volatility, and surging automation demand makes ZENA a speculative play worth keeping on your watch list heading into 2026. Next, MineralRite Corporation, ticker RITE. MineralRite is an ultra-speculative microcap trading on the OTC market at around 0.0067 cent per share with a market cap under $30 million. Operating in the mining and precious metals sector with a focus on mineral processing, certification, recycling, and equipment services. Though still in the early stages of its turnaround, the company is undergoing a corporate rebirth, It has engaged a PCAOB auditor, reclaimed over 10 million dilutive shares, canceled more than $750,000 in convertible obligations, and reduced potential dilution by 1.2 billion shares. These actions, combined with plans for a Regulation A offering to raise up to $75 million annually for acquisitions and a push toward OTCQB uplisting, could lay the groundwork for a potential revaluation by 2026. Key catalysts include corporate restructuring that restores credibility, fundraising initiatives that fuel acquisitions of undervalued assets, and the chance of a market re-rating if audited reporting and acquisitions move forward on schedule. The risks, however, are substantial. RITE is still pre-revenue, thinly traded, highly volatile, and faces execution challenges, with some forecasts even predicting steep price erosion over the next year. Still, for speculative investors willing to stomach extreme risk, MineralRite represents a possible turnaround story, with cleaned-up liabilities, capital-raising strategies, and higher reporting ambitions hinting at a reset moment that could gain traction if resource prices rise or the M&A pipeline accelerates into 2026. Disclaimer: this video is for informational and educational purposes only. Penny stocks are highly speculative and carry significant risk. This is not financial advice. Always do your own research or consult a licensed advisor before investing. The last penny stock on my list is Quantum Blockchain Technologies, ticker symbol QBT. A former dot-com incubator turned AI-enhanced Bitcoin mining efficiency player, Quantum Blockchain claims its AI Oracle improves mining output or energy efficiency by 30%. That pivot has generated a phenomenal near 200% market cap surge, albeit from small base levels. If they validate AI-driven gains at scale, they could attract serious institutional follow-up and mining contracts. However, skepticism remains, as proof largely relies on FPGA tests, and ASIC-level validation is pending. Plus, crypto regulatory risk and Bitcoin volatility add uncertainty. Still, as AI penetrates crypto infrastructure, this small-cap player is one to bookmark.